All right, welcome back. You've tuned in, and we've got a really important topic to get into today. Those new U.S. tariffs, they actually just went into effect today, April 2nd, 2025.
That's right. And we've been digging through quite a bit of info to really understand what this all means, especially for the IT sector and, tech stocks.
Yeah, it's definitely complex. So our goal, like always, is to sort of cut through the noise and give you the key takeaways from what we've gathered. We're looking at how these new policies ripple out.
Exactly. So tariffs, we should probably just quickly define that again.
Good point. Yeah, basically, they're taxes on stuff coming into the country, imported goods. So if a tech company brings in parts from, say, China, suddenly it costs more. Simple as that, really.
And you might have heard this phrase, Liberation Day. It's being linked to these new tariffs affecting imports from China, Canada, Mexico.
Right, but it's important to note it's not like a celebration in this context. It just marks the day these tariffs kicked in. It's purely an economic implementation term, not, a political statement from us.
Crucial distinction. And this move, well, it aligns pretty clearly with the current administration's trade policies. They've been focused on addressing trade imbalances, reducing deficits. These tariffs fit that pattern.
Definitely. And it's not like things were perfectly calm before this, right? The Nasdaq, it dropped like 10.5% in the first quarter this year.
Yeah, pretty big dip.
And a lot of analysts were saying, that uncertainty about these tariffs was already weighing on the market, so the stage was kind of set.
Right. So our mission today, dig into our sources, figure out what these tariffs really mean for IT.
Okay, let's get into the why. Why do tariffs hit IT stocks so hard?
Well, it really boils down to how tech stuff is actually made. Think about your phone, your laptop, a gaming console.
Yeah.
They're all assembled from components that come from all over the world. It's a global operation.
Absolutely. Intricate supply chains. So if tariffs make those imported parts more expensive.
Exactly. It's like the basic cost of doing business just jumped for these tech giants.
And one component is super critical right now, right? Semiconductors.
Oh, definitely. They're the heart of everything. AI, consumer electronics, you name it. And our sources are saying that tariffs on Chinese goods, including semiconductors, already hit 20% back in March.
20%. Wow. And we're talking big names here, like
Apple, Nvidia,
yeah,
they're mentioned specifically. Even massive companies like that are going to feel the squeeze on their profit margins when core component costs rise that much.
Yeah, makes you wonder how they'll handle it.
And then there's the whole supply chain disruption angle. It's not just the cost.
Right. What do the sources say about that?
Well, uncertainty itself is disruptive. Potential delays, longer lead times for getting parts. It makes planning incredibly difficult. Investors get nervous when things are unpredictable like that.
Yeah, like trying to build a house when you don't know if the lumber will show up or how much it'll cost week to week.
Exactly. And our sources also mention companies thinking about, moving manufacturing to avoid the tariffs.
Like shifting production out of China.
Yeah, that's a logical thought. But it's not easy. You're talking huge investments, finding new suppliers, setting up new factories. It takes serious time and money.
Right. You can't just pack up and move a high-tech factory overnight.
Not at all. And actually, it's interesting. Some sources mention that while the big guys might look at the U.S., smaller component makers are maybe exploring joint ventures in places like Southeast Asia. Different strategies, different risks.
And eventually, who pays for all this? Does it hit us?
It's very possible. Yeah, companies might pass those increased costs on to consumers. Your next phone, your next laptop could cost more.
Which could mean people buy less stuff, right? Lower demand.
Precisely. And there's another layer too, retaliation.
Right. If the U.S. puts tariffs on Chinese goods.
China or Canada or others might hit back with their own tariffs on U.S. exports. And that could definitely include tech products. So U.S. companies could get hit on imports and exports.
A double whammy. The term reciprocal tariffs kind of hints at that response idea, doesn't it? That this is seen as a reaction to other countries' trade practices.
Yeah, it adds another layer of complexity to the whole situation. Negotiations, potential resolutions, it's all tangled up.
Okay, so clearly a big deal. What about the market reaction so far? Our sources mention some specific numbers.
Yeah, definitely some jitters. We saw Tesla down, 36% in Q1. Nvidia dropped 20%. Those are significant moves. Shows the market anxiety.
Big numbers. But then there was that little uptick just before the tariffs hit. Nasdaq up slightly on April 1st.
Right, about 0.87%. Interesting little bounce. One source suggested maybe some speculation about exemptions, or maybe the initial hit wouldn't be as bad as feared.
Could be. But Probably dangerous to read too much into one day's movement, yeah.
Absolutely. Our sources stress that. The real question now, according to them, is about the specifics.
Like, how broad are these tariffs going to be? Do they hit everything?
Exactly. And will there be any carve-outs, exemptions for certain tech products or components? That lack of clarity is the big problem right now.
That's the key, isn't it? Uncertainty.
Yep. And until that clears up, our sources are basically saying expect more volatility. Markets hate uncertainty.
Okay, so we've painted a picture of immediate challenges, but it seems the story doesn't end there. Our sources reveal a fascinating counter-narrative, how these very pressures are forcing innovation and strategic shifts within the tech industry.
That's a great way to put it. Companies aren't just sitting back, they're looking long-term. How do we adapt?
And one big strategy is moving.
Relocating manufacturing, yeah. Countries like Vietnam, India, Mexico, they're looking more attractive because they don't have these same U.S. tariffs, at least not right now.
Makes sense. But it's not just moving out, right? Some are moving in.
Correct. There's a significant push towards domestic production, too. Our sources point to Apple spending billions on chip facilities in Texas. Intel's doing similar things in Arizona.
These are huge bets on U.S. manufacturing.
Massive. And the idea is, long-term, this reduces reliance on imports from places like China. It could really mitigate these tariff issues down the road.
But again, building those relationships with suppliers, getting that whole ecosystem running, it takes time. It's not just the factory building itself.
Absolutely. It's a complex network. And you can't forget the government's role here either.
The CHIS Act.
Exactly. That legislation is actively pushing and funding this move to bring semiconductor research and manufacturing back stateside.
So it's a mix. Short-term pain, maybe with tariffs causing headaches, but also these long-term strategic shifts towards different locations and more domestic production.
Right. And the companies that navigate this well, that make these smart adaptations, they could actually end up stronger in the long run, according to our sources.
Which brings us to the listener. If you're watching this market, if you have investments, what should you be focusing on right now?
Good question. Clarity is key. Our sources say, first, keep tracking the tariff news. Any updates, any talk of exemptions, especially for tech, that's crucial.
That news could definitely move the needle.
Definitely. And second, watch those quarterly earnings reports like a hawk.
What should we look for specifically?
Listen to what executives are saying. How are they managing the supply chain shifts? What are their actual costs looking like? What progress are they making on domestic production plans? That's where you'll get the real story.
Makes sense. Trying to predict day-to-day market swings with tariffs? It feels like trying to catch smoke, doesn't it?
Pretty much. So the takeaway seems to be, yes, tariffs are causing short-term turbulence. But the real focus should be on which companies are adapting smartly for the long haul. It really hammers home the need for solid research on your own investments.
Okay, so wrapping up our deep dive today, these new U.S. tariffs, they're definitely shaking things up for IT and tech stocks. We see the immediate cost pressures, the supply chain worries.
We also see the response. Companies aren't passive. They're looking at relocating, investing heavily in domestic production. It's forcing strategic change. Our sources suggest this could really reshape things long term.
Absolutely. And maybe a final thought for everyone listening. As you process this, think about the bigger picture. How might these global trade shifts redraw the map, not just for supply chains, but for where tech innovation actually happens in the coming years?
It's a fascinating ongoing story.
Indeed it is. And we'll keep digging into it. Thanks for joining us.